Okay, good afternoon once again, everyone, and thank you for joining us. Good morning. If you're in other parts of the world, good afternoon, good evening. Thanks once again for joining us. My name is Akeem Akiode, Head of Growth at eVerify, and it gives me great honor to have you join us again for another wonderful episode of the Regulatory Compliance webinar. Today, we're going to be tackling a very exciting topic bordering around transaction monitoring and how we can leverage technology for greater accuracy and efficiency. One exciting thing about our gathering today is that 80% of the people who have registered for this call are compliance professionals and have direct compliance roles. And I know that you are in the right place because we have amazing speakers with years of experience in the compliance landscape who are going to be guiding us through this conversation. Once again, please feel free to introduce yourself in the chat box. Tell us your name, tell us what you do, tell us where you're joining us from, and please get your questions ready. Whether it is directly related to what is discussed on the call today, or it's something that's been bothering you before now that borders around the issues of compliance, please feel free to get them ready and ask when the time comes. Um, in a few seconds, I'm going to be handing over to our amazing moderator, but please allow me to quickly introduce him before we do that. So our moderator for today is Mr. Joachim Adeponle. Joachim is an exceptional professional with a dynamic career spanning over 20 years in the finance and banking industry. He brings a wealth of expertise and accomplishments to any table. He recently spearheaded the launch and growth of a digital remittance and payment platform in Canada, extending operations into the United Kingdom and the USA. His role has encompassed diverse responsibilities, including business development, financial management, operational leadership, and research. Currently, he practices as a project and change management consultant. During his career, he achieved remarkable success in enhancing client onboarding experiences, implementing robust financial controls, and streamlining operations. He consistently improved profitability and mitigated risks by leveraging extensive financial market knowledge and adopting fair trade practices. He spearheaded transformational initiatives, resulting in substantial productivity and gains, expanded consumer access to digital services, and increased revenue. Ladies and gentlemen, please help me use the emoji icon on your screen and welcome Mr. Joachim as I yield the floor.
Yeah, thank you. Thank you very much, Akim. And I really appreciate that introduction. Uh, it's nice meeting you guys once again on our sessions. And before I proceed, I don't know, I would want to request Akim if you also help me in reading the bio and the intro profiles of our speakers today. We have two fantastic speakers that are joining us today. Both of them are seasoned compliance experts. But the good thing there is that we have a two-in-one package in each of them because both of them are also certified CPAs. They are chartered accountants in their own guys also. So without further ado, I think first I want to use that opportunity to introduce Claudius. I don't know, Kim, if you can read the profile for me from your end, I will appreciate that.
It'll be my honor to. So introducing Mr. Claudius Otegbade. Mr. Claudius Oladiran Otegbade is the co-founder and managing partner at C&G Professional Services, where he leads a dynamic team in providing specialized services in anti-money laundering, AML compliance, forensic accounting, fraud investigation, and regulatory audits. With over 18 years of experience, Claudius is a seasoned chartered accountant and financial crime consultant, known for his expertise in navigating complex financial regulations and safeguarding organizations against financial crime. Before co-founding C&G, Claudius served as the Director of Compliance and Chief Compliance Officer at WFCU Credit Union, a prominent credit union in Ontario, Canada. His extensive experience Also includes a significant tenure at two of Canada's leading international professional service firms, MNP LLP and Grant Thornton LLP, where he specialized in forensics and AML practice for over 5 years. His work in these roles earned him recognition as a trusted advisor, speaker at various financial crime conferences across Canada, and served as a pioneer board member of the Association of Certified Financial Crime Specialists, Toronto chapter. A well-rounded professional, Claudius holds a bachelor's degree in accounting and an MBA from two Nigerian universities. He is a certified anti-money laundering specialist, certified fraud examiner, certified financial crime specialist, certified forensic investigator, certified Bitcoin professional, certified cryptocurrency investigator, and an alumnus of the fraud examination and forensic accounting program at the Seneca College, Ontario, Canada. He's happily married and a proud father of two boys. Ladies and gentlemen, please help us usher in Mr. Claudius Otegbade with amazing emojis on your screen.
Thank you for the introduction, Akim.
Awesome, thanks. And I think we'll also introduce Lekon also. Lekon is also joining us. Coincidentally, both of them are situated currently in Toronto. So Lekon, if you can, okay, yeah, that's his profile is now up. Okay, I came over to you.
Okay, Mr. Lekon Olalekan Olatunji holds a bachelor's degree in accounting and a postgraduate certificate in fraud examination and forensic accounting. He's a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and a certified public accountant, CPA of New York, United States. He's also a certified anti-money laundering specialist. He has over 2 decades financial service experience covering banking operations, corporate audit, forensic investigation, AML and AML/CFT, and regulatory risk compliance. He has over 16 previous international banking experience with different financial institutions in Africa and has over 6 years banking experience in different financial institutions in Canada. The last being a vice president global AML audit at Citibank, Canada. Ola is the founder and president, Onilix Consulting, and also an AML advisor with C&G Professional Services Incorporated. Ola's hobbies include table tennis, soccer, and basketball. He's happily married with children. Ladies and gentlemen, please help us usher in Mr. Olalekan Olatunji with amazing emojis.
Good morning and good afternoon, everyone. It's nice being here. And Joachim, this is a lovely one. And Akim too, I like what you guys are doing. I like speaking on the subject matter AML, and I'm happy to be here this morning. Good morning, everyone. Yeah.
Awesome. Thanks. It's nice having you, Lekon. So without further ado, I think we'll get to the conversations for the day. But before I start, I know you guys were at the compliance and AML conference yesterday in Toronto, the 2024 Toronto conference for compliance and AML. I was supposed to be there, unfortunately, due to conflicts in my schedule.
It's actually tomorrow.
Oh, it's tomorrow. Oh, okay.
Tomorrow.
Okay. Yes, tomorrow. So hopefully maybe we'll be able to hook up there. I assumed it was yesterday.
Yeah.
Okay. Awesome. So now to the discussions for the day. I think today we'll be talking about the future of transaction monitoring, looking at various developments within the financial space and the rising intrusion of technology. I want to call it a disruption, but I will call it more of an intrusion, which is more of an enabler, right? So, but we'll start with AI and machine learning and how these two futures have been able to enable the ability for organizations, banks, financial institutions, and other organizations to be able to make predictive analysis. So I don't know whether maybe I will start with Claudius on that and see whether you can see how AI has been able to assist in detecting patterns of fraud in financial institutions.
Awesome. Thank you so much, Joachim. Again, thank you. Good morning, everyone. It's 7:15 a.m. in Toronto.
Yeah.
So it's I was worried if my brain would function properly at this time, but we're excited to be here to join you guys. Um, Diving into the topic on AI and how it impacts transaction monitoring. I want to step back a little bit to actually. I think Akib did mention about 80% of the folks here are compliance professionals. So we do not have to understand explain the basics of transaction monitoring. However, there's a point to actually walk people down the lane to where we are today, right?
Yeah.
Um, back in the days, a lot of these transactions that we have were either cash intensive transactions or the process was manual, right? And because the regulatory requirement was not as stiff as what we have today, a lot of compliance professionals were manually monitoring transactions back in the years, and that has evolved, right, from being intensive in terms of manual. We moved to what we call the rule-based transaction monitoring. Right? And what is the rule-based transaction? It's also program-based, but you require a human to set parameters. You set rules, and that rules is able to look through all the transactions you have, and if any transaction gets within those rules, within those parameters, the system is expected to flag, and you have a compliance professional review. However, they found that even with that, it wasn't effective enough. Compliance folks dealt with what we call the false positive, right? Which is that it falls within the parameters that you have set. However, it is a legitimate transaction, or there are no fraudulent transactions related to it. So, because of that issue, and because of the evolving technology, right, we woke up and then we found out that there's another thing they call artificial intelligence. And then what is artificial intelligence in a layman's language? It is basically computer operation that functions like a human, functions with human intelligence. So it's able to process information, it's able to make decision, right, which essentially would reduce the false positive. So what we have seen over the years with the invent of AI and machine learning is that in collaboration with rule-based, is that systems are more efficient. Two, you find that with AI, you are able to tackle transactions in real time. Unlike what we had in the past, that most of these transactions were historical. Before the compliance officer detects a fraudulent transaction or a transaction that relates to money laundering, it is almost too late. Transactions have been completed, right? Monies have moved, and unfortunately, financial institutions or reporting entities have been used to launder this money. But with the invent of AI and machine learning, what we are seeing now is that transactions are able first to be processed at a much larger volume because it encompasses a lot of data sets. And more importantly, it also does that in real time and is able to stop fraudulent transactions in real time or activities that are termed money that are laundered through the system.
Awesome. I think I liked that introduction you brought in the fact that before technology, I think most of the activity was post-mortem. The events would have happened, and at times it's months down the line before you start detecting maybe there was a fraud. And when you now investigate, you find out that, oh, there was certain pattern that occurred that resulted in this fraud. But coming to you, Lekon, I know in North America, for example, a lot of banks have been using this technology to improve their efficiency. I know JP Morgan, reduced the number of false positive by almost 50% when they introduced AI into their transaction monitoring. I know TD Bank is also doing a whole lot of that. What do you think why is it efficient in this space, in this other entities, but yet there seems to be a kind of struggle in most of the developing economies, particularly in Africa.
Yes, thank you, Joachim. Once again, good morning to everyone, and good afternoon to you guys as well. This is 7:20 in Canada here. So touching on what you said, AI, the introduction of AI has really improved things. The numbers have picked up to the extent that we have reduced false positives and reduced false negative. The other counterparty to false positive is false negative, and I know everybody's a compliance professional here. False negative in the sense that our systems are not picking what they need to pick. Thereby, our systems we are overlooking suspicious transactions. At the end of the day, we are going to fall into monetary penalties, which is very bad. So that's why when you've anchored the AML regime in an organization, because I've done that when I was the chief anti-money laundering officer in a credit union here. So what we call the data modeling department is very, very critical, very important. You as the chief lead, the chief and anti-money laundering officer, you must be able to sit with the modeling officer to twist, and trim the rope such that it will align with the system. Now, back to your question, why do we have success here and in the developing world we don't have success? It has to do with resources and the affinity to say, okay, we want to invest in compliance. Now, I've worked in both worlds. I was in like 4 banks in Nigeria before coming down here in 2016. So I understand our people and I know where we stand, because when you look at the cost, a lot of people say, okay, this is a cost to compliance. It's too much. Now, but the fact remains, when the Financial Intelligence Unit, otherwise known as EFCC in Nigeria, if it's very effective and if they are churning out sanctions, you see people retracing their steps, speaking more to compliance and putting more money into it. Now, in this part of the world, we don't have them as toothless bulldog. They bark and the bite. Now, for the purpose of this, a lot is in the public space. What has happened to Citibank and what is currently happening to them? When I was at Citibank here, the reason was there was a consent order of $400 million, which was as a result of non-compliance. So because the Financial Intelligence Unit is not a toothless bulldog, the bark and the bite. I hope you guys understand what I'm saying.
Yeah.
Because of that, you are forced not to pay lip service to compliance. You are forced to see through that you invest heavily in technology that can advance your ability to track and detect early enough those suspicious transactions. Like we said, Claudio said, we are speaking to static data, which is historical data, versus real-time data that AI has to deal with. But in all of these, we can still not wish away the intervention of human. Human still needs to be. You need to train them. That's part of compliance. You need to train them. You need to let them understand the behavior of those APIs, application programming interfaces that the robotics has to do with your transaction monitoring. So the reason why we have that is because of the way we pay attention to compliance in this part of the world versus the way attention is paid to it in developing worlds. Thank you.
Yeah, look, so you mentioned something, and I think I want to, maybe we should go deeper in that, because I don't want us to think maybe, in the developing countries, one of the biggest challenges they have is the quality of data.
Yeah.
And the quality of data makes it difficult for you to bring in this technology. to maximum efficiency. That's number one. And on the other side, also, we look at the regulatory framework. The regulatory framework we have in most of the Western countries is highly robust. But in Africa and some of all these other South American countries, there seems to be a weakness in the framework. So how do you see the delta, right, between what we have in the West and in these economies when it comes to the issue of the framework itself and also the quality of data that is available?
Yeah, thank you very much. So, what happened is that everything boils down to the FIU. Now, the Financial Intelligence Unit in Canada is called FinTrack. So for Nigeria, I will speak specifically, we'll talk about EFCC.
NFCC and NFIU.
NFIU, yeah. Okay, Nigeria Financial Intelligence Unit. So the point here is, we have regulatory pronouncement from time to time in Canada. And as a chief compliance officer, it's your role, it's my duty to plug myself into the site of my FIU. And as soon as I have regulatory pronouncement, I need to quickly incorporate that into my policies and procedures, incorporate that into the training, administer the training, get it documented, because these are the things that regulators will come and look at. Now, also, when you talk about data, now there's a lot of data cleansing coming up here, and I think they'll be doing in developing world. But now the data cleansing, because the integrity of data is very important, so that you can rely on those data, and the ability for you to store those data in a space where you can easily retrieve. That's why the new technologies here is talking about going into the cloud. You talk about scalability. Scalability allows you to be able to easily store more and easily retrieve. Now, versus when I was working on the compliance function in a developing world, you have the challenges of retrieving data. For instance, you have maybe Joachim Adekunle as maybe a customer. I want to retrieve some data. Now, because some of the data has been archived, it's been archived in other archives. So looking back in something called production order. So when you talk about production order, or those are alerts for the purpose of people, production alert police report, police issued order alert saying that, oh, this particular person, we need to investigate this person. And when you're investigating production alert or negative media alert, you need to go back to the day the guy has opened account. You don't want to leave anything undone. Oh, this guy started financial relationship with us in year 2000. That's 24 years from now. So you must be able to get into those data, quickly take a decision, manipulate those data with in Excel. But if those data are stored in a reservoir, in another reservoir, it takes time. So those are the things that are hindering what we do in this developing world versus what we do here, because those data are stored in an easily accessible place where you can easily access, retrieve, manipulate those data, take a decision, and quickly respond to the intelligence request. You don't take weeks. You see, it is called a priority task. So those are the things I would say is really affecting those performances in those areas.
Yeah, so I think I want Claudius to speak on the regulatory, the framework itself. In your view, how do you see the regulatory framework across the world, right? Looking at it, Sub-Saharan Africa, Europe, America, is there any pattern you see on the regulatory framework?
Yeah, so AI is still evolving. Right? It's a new thing. It's welcomed. However, it's still evolving. And because it's still evolving, a lot of these jurisdictions are also learning. They're also learning on the job as they progress. I think one thing that I also want to mention in terms of data, like I wanted to give an example, very simple example. We all know ChatGPT, right? Powered by AI. I noticed that when I use ChatGPT, when I use it to take a picture, first of all, it's clearer, even though it's from the same phone. I'm not sure if you guys are observant. You notice if you take a picture with your phone, it's not going to be as clear as you using ChatGPT to take the picture. Then the second thing is that when I scramble things on the notes, I make a note and I look at those notes, and I myself find it very difficult to read what I've written. If I take a picture with it, ChatGPT is most likely able to understand what I've written and put it down for me. 80 to 90% accurate, right? So it tells you that there's a technology behind it which speaks on the data, right? It's able to cleanse those data and make it useful for the compliance officer, right? So that is key. I know that the stage that we are currently at and in most jurisdictions is the fact that because data are not clean enough, the system is not able to digest those information and is not able to use it. I think the future where we are going is that even with the inaccurate or clean data that we have, AI can still help make those rules. They can still make the operation more effectively because they're able to digest those information. Speaking of frameworks, however, I know you touched on framework. In Canada, there are frameworks that so we have the Process of Money Laundering Terrorist Financing Act, which is the base of our AML program in Canada. And Lekon touched on it. These are constantly being reviewed regularly. So I think for me, what I will pick from where we are to jurisdictions like Nigeria is in terms of how frequent these regulatory updates are made, bearing in mind that technology also advances almost at the speed of light. So if you are not having guidelines and regulations that would catch up, then most likely if the framework is wrong or framework is lagging behind, then when you talk about the enforcement or the implementation of the framework, it will also be lagging behind because the very framework guiding it is right. It's historical. So I think I can speak to Canada over the last 2 years, maybe 2 to 3 years from 2021, we have seen significant changes in terms of the framework, in terms of the enforcement. Lake also mentioned FinTrack being the government agency responsible for administering the act. We have seen a lot more in terms of when they conduct examination, we've seen them looking more into the technology. So it goes beyond now having a compliance program. Now they're looking at your technology. What technologies do you have in place? What cybersecurity do you have in place? How do you protect customers' information? More importantly, if your system is rule-based, how often do you tweak those rules? Right? Have you ever tweaked those rules before? What's it, right? Lake also mentioned the issue on modeling. So those are the areas, even though they are not frameworks specifically being addressed, you can see it when they come for reviews or when they come for enforcement, that these are the areas that the regulators are now looking into. So I think for countries like Canada compared to Africa, I think what is really lagging behind is one, on the updates of those framework, and more importantly on the enforcement as well. So I think I think
I think you've actually tried to cover some of those things, and from what you said, I think this will bring us to the issue of blockchain technology, which essentially is the underlying technology driving cryptocurrencies, right? So, and in the issue of crypto, I think that's something that has been causing a bit of noise over here. We are aware of the Binance situation, not only Nigeria. I know Nigeria is still in that battle with Binance, but Binance has had so many issues across multiple jurisdictions, right? So, talking about blockchain, what do you think? What advantage does it bring to the compliance monitoring space? I know Ripple. I know if you can look at the example of Ripple, what Ripple has been able to do with blockchain, and that's a good example. So maybe if you can speak to that, Claudius.
Yeah. So for blockchain, again, blockchain is the underlying technology where cryptocurrencies are built or developed. And I think for us as compliance professionals, the key thing when it comes to blockchain is the transparency that it brings. So for blockchain, first of all, they said it's a decentralized ledger system. And what does decentralization mean? It means that not a single person has autonomy over the transactions being processed on the blockchain. So if a transaction has to go through, if a transaction has to be confirmed legitimate, then several ledgers will have to confirm that it is a legitimate transaction. And each of those ledgers will have to record it on the ledger that the transaction is legitimate. So I think for us, what it brings is that it brings that transparency. More importantly, for us as compliance professionals, we follow the money, right? And we follow the bad guys, because the bad guys are the ones that try to use the system and launder money and commit all sorts of predicate offenses. Bad guys have been exploring the use of blockchain or crypto for years. So it is also important as a 21st century compliance officer to also understand the technology and how these guys are able to leverage it. Otherwise, right, you'll be going in one direction and the criminals will be going in another direction. So I think for us, the way I see it as compliance folks is that, look, first of all, this is the platform that is currently being used by this bad guy, because they believed initially that anything performed on a crypto is anonymous. It is anonymous because you don't know who the sender is and you don't know who the beneficiaries are. So it's easy for Claudius to send crypto to Laker. But what has technology done? And how did compliance folks come in? RegTechs come in. They've come to say, yeah, we can actually identify the person behind the wallet, right? And that's, I think you also touched on framework. That's another area of the framework. The framework now says that for anyone using your platform, if you run a VASP or cryptocurrency platform, you have to conduct your KYC. So we now know that for jurisdictions like Canada that enforce this framework, we know that each platforms, they have a mandate to ensure KYC is complete. So if you have a wallet, they know who owns the wallet. And if you do a transaction on the wallet, the blockchain gives you the ability, like I said, it's transparent. So you can literally follow transactions from one wallet to several wallets. There's technology that can give you that visibility. And once you have the KYC on who has the initial wallet or who has the final wallet, then it is easy, much easier for the compliance folks to do their analysis. And if they have to report to the regulator, they can use that to do that. So I think the key thing there is that it is transparent. Right, and that is what we can leverage on, and the fact that there's also frameworks now by regulators that can guide the operations of blockchain.
Yeah. So now talking about that, so if you look at so every fraud and every compliance headache usually starts with onboarding, right? The KYC, the KYB. Yeah. So, and like you alluded to earlier, some of the challenges in doing some of these investigations, attending to some of these POs, right? It's the gap in the data that is gathered. And this brings us to the question is, where is that opportunity for technology to collaborate with existing institutions, particularly RegTech companies, to collaborate with existing institutions in ensuring that that particular onboarding process is faster, efficient, and the quality of the data that is gathered is intact. In our last sessions, we actually spoke a lot about this issue of data quality and the challenge it posed, particularly in a country like Nigeria, whereby there is still a lot of missing data gaps, right? You have people who have onboarded clients, but they don't have the accurate data. But I know of recent, there's the recent collaboration. Paystack, for example, is collaborating with the Central Bank of Nigeria in ensuring that some of these things are addressed. So where do you think the opportunities lie for RegTech companies like You Verify and others to, like I said, I don't want to use them as disruptors of the ecosystem, but more of enablers of the ecosystem? Where does technology lie in resolving some of these problems?
Okay, thank you very much. So I want to pick it from the angle of predicate offenses. As we know in compliance, predicate offenses, fraud, synthetic fraud, romance fraud, corruption. But in AML, our focus is in the proceed of crime. Now, before the intervention of maybe the fintech guys, I think from AML money launderers, they've been able to have a run day, a field day, prior to now, and I will tell you why. You can easily conduct a synthetic fraud. My name is Lekon Latunji. I can pick up an ID card, put my face, tell whoever cares to listen, my name is Joachim Adekunle, and I'll be running things. So there's nobody to detect me. There's no synchronization or API connection between the what we call CIP, Customer Identification Program of my bank, with the database of maybe FRC. I'm trying to localize this. FRC in Nigeria, the one that issues driver's license. Now, okay, in Canada, it can be Service Ontario. So in Canada now, you now have a synchronization and a seamless integration between your CIP system and the authority issuing driver's license. So easily, if I come and say, my name is Adekunle Joachim, they look at it, they say, but this is at variance with what is registered in the database. So that is evolving. We are moving to that. So you have organizations that are not invested in technology. They will not be able to detect that on time. And you see those synthetic fraud going through seamlessly. You understand? So that, I think, is something that I lost my train of thought. I thought your question again. Sorry.
No. So I was just trying to see where the opportunity lies for technology firms to improve the compliance space, right?
Okay.
Generally.
Lovely. Okay, lovely. So technology, like I think I'm still on the track. So technology has really helped to lower the risk that organizations carry, as it were. Now, another thing I can talk about technology was at my time at the credit union, where we were looking about getting a greater share of the market. Now, in Nigeria, we say the unbanked. Now, we get the unbanked, so we have what we call accounts open anywhere. You with technology, you can open an account from the comfort of your room. You go to a portal, you just fill the form, you complete the ID card, everything comes to a repository in my bank. We look through it, we verify you, we just ask one or two questions, the account is open. So the onboarding process with technology has made it very, very easy, and also to easily detect fraud, because now you can see the data we are getting from Joachim, for instance, is an online real-time data. The quality is sure, the quality is sufficient and reliable. So we can quickly, this is not Joachim, no. This is him or her. So we can take a decision and move. As against when technology has not pervaded the system, you can just come, submit your document, we review it, we come around, we do what we call verification, physical verification. Of course, you can stage manage anything. You can say, sorry, this is my house, this is not, you put pictures in and stuff like that. I remember we do those when I was an account, we call them relationship managers then back. So with technology, things have evolved to the extent that there is easy data cleansing. The quality of data is very good, and we can easily detect that, oh, this is fraud and this is not fraud. So I can say technology has really helped us to move to that level. Now, the question is, are people ready to invest in this technology?
Okay, that's always a big question. I guess it's always the issue of cost, right?
Yes.
And I think that's why organizations like You Verify are providing platforms that can make the cost of well, let's say the cost of compliance a bit manageable, in the sense that you're able to spread your cost over a period of time. I can see there are some questions. I will want to take some questions. Akim, I don't know whether we can take some questions from the audience.
Yes, we can, but preferably after the conversation is concluded.
Yeah, because I've just been mindful of time. So, just on the last quick one, I want to look at some case studies across Africa, right? I know in South Africa, the First National Bank, they've been using AI successfully to do transaction monitoring, right? I know in when I was in Cote d'Ivoire, one of the challenges we had also was there was a big challenge in our ability to identify fraud patterns, whereby certain transactions will occur or are occurring, but you don't know that this is a new pattern of fraud. And it's only after a while, when you start having those operational losses, that you now begin to say, oh, what is happening here? Then you look back and begin to connect the dot and said, oh, this is a pattern. In your view, how do you think we can, because I think Claudius mentioned that the ability to build these rules and to also evolve these rules, is there any role technology can play in the assessment or in the quality of the rules you have set up in your system? Can technology also help you in improving these rules progressively?
Okay.
Yeah, I think.
I don't know anyone that wants to take up.
I'll quickly jump on that. I think, again, I mean, that's the whole conversation we're having today, right?
Yeah.
On how AI can help enhance this quality. We've used transaction, we've used rule-based, and we know that it is not as effective as it should be. There will always be a gap using rule-based, And a clear example, recently, my friends came over and we went shopping. And then I was using my credit card to make the payments. But then all of a sudden, my card got blocked. Right? I tried to tap it and it got blocked. And instantly I got a text message. We've noticed unusual transactions on your card. Can you confirm if you are the one making these transactions? If yes, if it is you, reply yes or why. If it's not, right? So, and I laughed and I showed the sales lady that, look, my card was just, and I was really impressed, because again, that is the whole essence of AI in a transaction. And why did I say it was more AI? Because when we went for shopping, it's still within my geographical area. So if you're talking about rule-based, a rule-based will say, okay, Claudius is in Canada. If Claudius goes to Nigeria or is out of Canada and he does a transaction using this card, flag it or block it. That's rule-based. But what happens if I'm still within my geographical area, but the transactions, even though we're minimal transactions, were more frequent than what I used to, and the time of day at that location was also unusual, right? It's difficult for you to have a rule base that can really pin such transactions down as suspicious, right? They were not high value transactions, $50, $30. But in like a space of 30 minutes, I tapped my card almost 7 to 10 times. So
And I think there is even a better version of that, whereby even if you used it in a store that you have never shopped before, you also get an alert that, oh, you have used your card in this store. You have never shopped here before.
exactly.
Is that a fraudulent? Do you want to report this transaction?
Exactly. Right. So I think the beauty of transaction monitoring is where we're heading to, right? The use of RegTechs incorporating AI. I think a lot of RegTechs are now beginning to incorporate that, and it's something that we encourage. But that is the future. That is where we're going to, and that is where we're hoping the RegTechs would also take us. So it's not eradicating rule base, but it would enhance it. You might still have your rule base, but ultimately, the way fraud and money laundering is, you need a system that can understand the pattern, right? That can study each individual's pattern of spending and can detect what is abnormal in each of those transactions, right? It does reduce the false positive, which I mentioned earlier, which comes down to the resources that you have, right? We've seen organizations, and a lot of organizations in Canada, I've been an auditor here, a lot of organizations that were fined by fintech were fined because they had a lot of alerts that they were not able to close within a reasonable time.
Yeah.
Right. And you find out that a lot of the times, it's like I said, it takes resources. More important is that a lot of these alerts are false, they're false positive, but they're just there, right? And what it does is also that it stops you from figuring out or seeing those transactions that are actually illegitimate or fraudulent transactions, or transactions that are high risk. So I think that's where RegTechs can come in. In the incorporation of AI as they continue to build. And another thing I want to mention is they also should work with regulators. In Canada, they do it a lot. Before FinTrack comes out with any updates on framework, they actually have a list of RegTechs that they will call for in meetings. I will have series of meetings with them to make sure that their technology can also ingest information and provide information that FinTrack wants for their own purposes, right? So they have constant meetings with RegTechs in Canada before. So when you have a technology come out, most likely it's past that test. And that's why you have technologies that are able to do your transaction monitoring and also file reports directly to the regulator, right? Seamlessly.
Yeah, so that's where that collaboration comes in, I guess.
Exactly.
Yeah, I don't know, Leko, do you have anything to say, any quick thing you want to say on this?
Yes. So I think what Cledos is saying is spot on. So that's what we call predictive ability of AI enabled systems. So, for instance, I'll give you a live example. I'm a Canadian citizen here. So when I'm going to the US, it's seamless. Just go through the border and move. So I decided to say, okay, fine. I want to have a December holiday with my family in the UK. We've not done that before. My card was, I was alerted that this transaction come from you, given the value, myself and my family, that does this emanate from you, or else report it as a fraud. Quickly, I said it emanated from me. Now, where I'm going is this. We eventually canceled because, okay, what happened was that I was thinking it should be in Canadian dollars, but unfortunately it was in US dollars. So I was not ready. So when I saw it, I got called out. So my transaction did not see it. I said, why? But this is the amount. So I now canceled the transaction. Now, the second time, I now enabled my account with the funds required, and now processed the same transaction. I was not alerted at all. So because my bank has an AI-enabled system, they now have that pattern that, oh, this transaction that Olaliko is doing now, he has done it before. It's not a fraud. So just to let you know that with AI, we are going into that place where fraud will be dealt with at the highest level. Now, I've been an auditor. We know that we say fraud gathers momentum. So over time, people, as an auditor, you want to look at fraud pattern when it has happened. Now, that involves a lot of loss of funds. But now with AI, you are looking at fraud, not allowing it to happen before it happens. It's not post-mortem. It's not static data. It is online real-time data. Now, one of the imports that I can speak to example here is I've done a lot of consulting in the ML space in Canada, different banks, dealing with different look-back projects when they have monetary penalty sanctions that they need to pay. So I've dealt with those projects. So, but there was a time, and I was anchoring the AML space in a credit union. Now, we used technology in rendering our returns. In when you decipher that a transaction is suspicious, you must report to FinTrack as soon as practicable. In other space, maybe US, you still do within 30 days when a reasonable ground to suspect is determined. But in Canada, it is now as soon as practicable. Now, what were we doing? Quickly, as soon as we determined that we do our case narrative part G with the API, we forward it quickly. So technology, I was telling the guys working with me, I said, God, you guys are enjoying this seamless integration between a transaction monitoring tool with the
regulator
portal in FinTrack. You guys don't know the importance of this. This task that one person is doing takes 10 people to do it, because you need to do the case narrative. You need to fill in those STR information. You concentrate on the KYC information of the focal client. You concentrate on the transaction information of the focal client, address and stuff. It's a very long line of Excel. There are bound to be mistakes.
Mm-hmm.
You get pushback from FinTrack, and again, you will be fined for reporting it late. So just to let you know that technology involvement is an enabler for transaction monitoring. Thank you.
Yeah, thank you so much. And I think at this point we're almost running out of time. Akim, I think we should take some of those questions and see whether we can deal with them as quickly as we can. Any questions, Akim?
Most definitely. Thank you so much, sir. Thank you, Mr. Olalikon. Thank you, Mr. Claudius, for that wonderful delivery. So now we'll take questions. So far, I do not have any questions in the chat, but if anyone has questions, now will be a great time to ask. Please indicate by using the hand raise icon on your screen, and I will call on you to ask.
I think there's a question from Charles Asamoah. He said, I'll be happy to get some insight on the current tools used.
Oh, yes.
To better handling transaction monitoring cases. Keep the focus on cases that work. So I don't know. I think the first part of the question is that we should provide current tools. I'm not sure if we're allowed to mention tools.
No, because I think we can just talk generally on the different types of tools that are out there, right? But like I said, most times I think when it comes to the issue of compliance, every business, it depends on the kind of business you do, will determine the kind of tool you will need. And at times, some of the tools that are out there, you need to actually tweak it to become more bespoke to your own need. And I think that's why, like I said, most of the reg techs out there, they need to do a needs assessment of your compliance program. And based on that, they'll be able to tweak some of these things to be more specific. Because if you say, oh, because bank A is using this tool, and I'm also going to take on that tool, it might not meet your own particular need, because some of your customer profile, for example, might not be the same with that of bank A. So I think on the issue of tool, it's always best. It's like medicine. You can't just say, oh, which doctor should I go and see? It depends on what problem you have that will determine the doctor you need to go see.
Exactly.
Any other question? I think for me,
maybe,
I I actually have a question or an input. So in the news today, I think in Nigeria, there's actually a bank that has actually has gone to file an injunction at the High Court because they have lost about 6 point something billion naira to fraud, which was not quickly detected, and 20 other financial institutions have been joined in that. Well, essentially, what they're trying to do is to freeze the funds that have left them into those banks.
Okay.
And so which is more of like, like I always call it medicine after death. Why do you want to go through that route when you could have put in a predictive 6.9 billion will not leave at a go? Such an amount would have left in different little amounts. And ideally, if you had this predictive opportunity, how could you have stopped that? Yeah, I'm sure some of the recent cases we also have in Nigeria, particularly whereby some of the banks have onboarded clients without completing due diligence. So, and that has also, in fact, issues like the kidnapping, the banditry, and the kidnapping for ransom and some other things. So, how do we bring that monitoring opportunity using technology to identify such trends early? Because for me, I'm a key fan of early alerts.
Yeah.
When you get early alerts, how do you quickly get early alerts? Do I get the early alerts on time? And when I get the alert, how quickly am I able to analyze and make a decision before it gets too late and you will suffer? Because the financial loss is at the end of the program. It starts, like I said at the beginning, everything starts with onboarding. Then in between, you have transactions. Then at the end of the game is the loss.
So I would say, one of the beauties, things that I appreciate about fintech, speaking about the Canadian agency, is the fact that they're able to look at prevailing issues, fraudulent issues, money laundering issues, and come up with what they call indicators. We call them operational alerts. Right? Recently, we've had one on human trafficking. We had one on sexual exploitation. There's one on illegal cannabis, underground banking. And what does this operational alert do? They are basically trends that they've seen based on the information they've received from reporting entities, including FIs. Over time, they've studied the pattern, and they've been able to identify pointers that would show you that this is where this transaction is heading to. Now, what they do with those alerts is that they come up with those red indicators and they publish it from time to time, right? And that helps reporting entities build rules or incorporate these indicators into the system, thereby also identifying those transactions and possibly stopping those transactions before they occur or before they pass through their financial institution. And I think that's one thing that is lacking, right? It's the ability to ensure that these operational alerts are produced within time. So you gave an example of kidnapping, which is rampant. I'm not sure if EFCC or
NFIU,
right?
Or anyone is
right?
anybody.
Exactly, right? What are the indicators? There will be indicators, certainly. Right? If they provide these indicators, then it makes it easier for the banks to incorporate and build this into the system, thereby stopping those transactions before they occur, or even if they see, they can freeze the funds and report it to the respective government agencies.
Awesome.
Yeah.
I think there's a question I just dropped.
Okay.
Akim, I don't know how we're doing on time. There are some questions.
We still have 27 minutes, so I think we're doing good.
Okay, awesome. So can we take some of those questions, Akim?
Yes. So there's a question here I'm starting from the last, Tony Stephen, and he said, money launderers continually develop sophisticated methods to evade detection, making it difficult for financial institutions to stay ahead of the threat. As methods evolve, compliance programs need constant updates to detect and prevent money laundering schemes. How often should these updates be carried out? How can we ensure criminals do not use the same AI and machine learning tools to compromise the system and commit frauds?
Okay, I think let me take that. Fraudsters, money launderers, and terrorist finance professionals, because they have their own professionals too. People who wants to break the rules that you've set up in the organization. Now, it boils down to the organization itself. How do they embrace compliance? I'm going to say that. You see, the 5 pillars of AML is very critical. Who is sitting at top of the compliance regime in the organization? Is he a knowledgeable person? Does he have the wherewithal? Does he have the ability to say no to some transactions, to some onboarding? Does he have the knowledge to properly classify customers when they are onboarded? Do they perform normal EDD? Now, do they do KYC refreshes? KYC refreshes allows you to reclassify and reposition the risk scoring of your customers, of your clients. Now, you have rules. A politically exposed person in Canada is called a local PEP. If Olalekan Latunji has been a councillor in Nigeria, if you move to Canada, you automatically becomes a foreign PEP. And a foreign PEP is a PEP for life. So I cannot escape it. If I become a local government councillor, I move to Canada, I will be under the constant radar of monitoring. My KYC refresh, my risk score is high score. So, but if I become a councillor in Canada as a local PEP, after 5 years, they decimate it, they take it away, I become a regular person. So the 5 pillars speaks. How do you train people? How do you update your policies and procedure, your risk scoring, your risk assessment, your transaction monitoring, your investigation, your third-party effectiveness assessment that you need to do? So those are the things that when you don't do it rightly, you will not get the right result. So I would say when you properly classify your account between high risk, medium, and low risk, and you give it those monitoring that should be done. For instance, when I was the chief anti-money laundering officer, as soon as your profile moves, I escalate your risk profile from low to high risk. I have to monitor your transactions every year. You become a risk to us. So if I don't manage that risk, if I don't check on you, what you do, I'm not going to get a right result. I'm going to get the wrong result. You can't plant yam and expect to get okra or something like that because you are not doing the right thing. And you, like I said, you must have the ability to say no. As the chief compliance officer, transactions have come to me, and I point out to them that we cannot do those transactions. And I gave them substantive law. I back my position, and I got pushbacks, but I stood my ground. So these are things holistically that makes a compliance program to work. If we have a robust program and the person there cannot say no, it's not going to work. So you must have the balls to say no, this transaction cannot scale through. And it talks about tone at the top,
Mm-hmm.
the tone, the environment. So holistically, that's what I want to say to that. Thank you.
So that means I think this falls down to the fact of the balancing the risk and the reward, right, of every transaction. So if you outweigh the risk, I think the challenge with enforcement in Nigeria, it's one of the big concerns, because when I know when I was in banking in Nigeria, what most organizations usually do is they look at the risk, they look at the reward, right? The risk is the regulatory fine, and the reward might be the profit they make from that deal. If the reward is higher than the regulatory fine, they will actually go. And most of the regulatory fines, I think, in Nigeria are not quite as punitive as we have here in the West, because I think the fines here, they make it ensure that you will not think of ever doing such transaction if you look at what the consequences are. So which comes out to what we discussed again about the robust framework that needs to be done in that space. I will take one of the next questions from Temitope Lawal. She would ask, as financial institutions keep adopting AI and machine learning for transaction monitoring, how can they balance improved accuracy and efficiency while minimizing false positive and ensuring compliance? I think this is what we have been discussing all through that with machine learning and AI, it actually reduces false positive and it includes the operational efficiency in the compliance space. So what approach do you recommend for keeping transaction monitoring system agile and responsive to frequent regulatory changes in the regulatory landscape? I think that was the last comment, Claudius, you made. I don't know, I think we covered that, Claudius, or is there anything you missed?
Yeah, so
to this question.
Yeah, so in terms of the frequency, I will use OFAC as a good example in terms of how you should respond. So OFAC is the US agency responsible for additional sanctions, right? So there's I've forgotten the name of the company, but a company was fined in the US because I think within 48 hours after OFAC released their updated list of sanctions, a company was added to the list. Unfortunately, this financial institution did not update their sanctions database, and they were not able to track or stop the transaction. Unfortunately, one of those transactions belonged to those that was added to the list within 48 hours. And this business, this FI was actually fined millions of dollars. Now, so coming back to address that, how frequent should you? It is almost instantly, as soon as possible, because in the West, again, sanctions penalties are pretty high, right? When you compare the cost of compliance to the cost of the penalty
Non-compliance.
or not compliance, right? It's not something you want to joke with. And that again, going back to weaker framework, weaker enforcement, that is what developing countries, emerging economies, that is what they thrive on, because there's no enforcement. So, but the standard and the best practice is that as soon as possible, right? So one of the tests we do for sanctions or PEP updates, like is that we look at recent sanctions lists from several jurisdictions, and we look at what you have. We run those names on your system to see if the system is able to detect. Right. So so that's for sanctions, and that is for PEPs, because those are very high risk sanctions. Ideally, it says you shouldn't deal with you do not put transactions for sanctioned individuals or entities. PEP, they are high risk, so you're meant to flag and review those transactions. So so that is one thing I want to add, that it should be as soon as possible. And that is also where the red techs also play a big role. I remember during my time at the credit union, every time we had these updates, operational updates, a month will go by and I'll look at the system. It was rule-based, and I will ask myself, I'm like, we have these indicators. How are we monitoring for this particular type, right? Take, for instance, human trafficking. How is the system monitoring for human trafficking? We have these rules, but there's not a specific rule that targets this. And then we started engaging the vendor, and of course they had to build in the rules. And then we made that like a constant thing, that every time we had a meeting, we'll always come up with, this is the trend we are seeing now. Do you guys have something to detect it in the system? And they're always going back to build. And they were able, over the time, they were able to build their system so much that it has all these transaction monitoring rules. Right? So that is the benefit of having this reg text that can also grow and scale, and also work with the regulators to make sure that every time there's an update, you wouldn't have to do the update. Your reg tech would have to do that for you and push that to you, and then you can you can implement it rather than you having to build it from the scratch.
Okay. Thanks, Claudius. The next one, Olumide Ake asks, when you perform a transaction in an unknown region and it gets flagged, do you just get a confirmation message to reconfirm if you are the one making such transaction, or such messages comes with extra security features or identification? I think we spoke to this, and like I said, with some of the advancements in AIs now, it's not only when you do the transaction in a particular region. Even if you shop, maybe you always shop at ShopRite, and today you go to Spa and you shop immediately that day, while perhaps when you're still in Spa, before you leave Spa, you will receive a notification on your app indicating that there was a purchase of X amount at Spa, which is not your usual shopping location. Do you want to report this? So it gives you an opportunity for you to report that transaction. And I believe once you report the transaction as fraudulent, the fraud control process within the bank will kick in by flagging, disabling your card, so that there can be no further transaction on it, pending when you resolve. Maybe I think ideally you request, or they issue a replacement card for you. So, but like I said, it depends on how well the financial institution you're banking with has integrated technology into their fraud monitoring space. There's another question which I think I would like Lekon to take. It says, speaking of data, effective transaction monitoring requires clean and accurate data, and from experience, this seems to be lacking in developing world, as you rightly mentioned. How can experts in the field navigate this challenge and still achieve adequate transaction monitoring, bearing in mind that this data issue may not be sorted immediately?
Okay, that's a difficult one, and I will tell you why. Now, when you are being audited as an AML champion, for instance, if Joachim is the chief anti-money laundering officer in XYZ bank in Nigeria, now you lack technology. Now, Lekon is the auditor, is asking you, okay, Joachim, let me see your onboarding process. Now, what is Lekon looking out for? He's looking out for deficiency around, and you now realize that there are so many deficiencies here. No ID card. Oh, you start scrambling, making meetings. Please go and call your customers to bring your ID. Now, it's going to make you to look not good. And I'll give you an example. So when I was the chief anti-money laundering officer, I was audited. Now I had deficiency as well. So how did I get around this? Now, it's not compulsory that the customer must give me a physical ID card. So the customer can, as soon as it goes to any of the branches, I've instructed them that please take details of his ID card and put it on the system. So when the auditor came and said, oh, look at you, you're here. There's no, I said, no, don't worry, there's ID card. I have ID card. Now, I was able to prove it to them on the system that we have ID card. And I just told them that the customer refused to give me the ID card, the physical ID card. Now, why am I giving this example? If you don't have such technology to get those data, you are not going to look good. No matter the effort you put, you can't just go to 2,000 customers' houses in a day and ask them to give you ID card. Some of them are late. Some of those accounts needs to be punched away, moved to suspense account. So there is nothing absolutely, my friend, that you can do unless those technologies are added to allow you fetch those data, clean this data, and make it work. Or else you will be monitoring transactions from the manual perspective. You will have a lot of false positives that you will not be able to report, or you will fail to report. You don't have systems that will calibrate those. Let's say you have 30 false positives. You must be able to tell yourself as the compliance officer, oh, I have 30 false positives. I've done reviews, and these has ended in STR. This has ended in do not report. You must be able to talk definitely, or else you can't just do without technology. So that is all I can say. Thank you.
Yeah, thanks, Olalekan. So I think we have two more questions. I would take the first one from Bolanle Oweye, and I think this one is um, asking whether, when it comes to the issue of non-compliance, which are self-identified by the FI, are regulatory penalties lessened? I can speak to that from experience. So what regulators encourage you do is, once you identify a gap or an infraction, you should immediately report to them. So you taking that action actually will lessen the repercussion than if they come and they are the ones that detect that. And I think this is also applicable in audits, also even internal audits. When you're dealing with internal auditors or external auditors, self-reported issues are usually given less penalties, right? So, but the other question which I want maybe Thaddeus to take, this has to do with the issue of data privacy, right? And we know the need of, when you use AIs and all these technologies, you need to consume a lot of personal data. So Tony is asking, complying with AML regulation often requires collecting and analyzing a vast amount of personal data. This creates tension with privacy regulations like the GDPR in Europe. How can institutions balance effective AML monitoring with individual rights to privacy?
Yeah, so I wanted to touch on that, but again, I mean, we can spend the entire day talking about, AI privacy. But yes, I agree that privacy is a big part because it comes down to the information. It comes down to the information, your customers' information, where they are housed, and what you do with the information, right? So I want to take from, first of all, to address using technologies, right? A lot of the times when we onboard a vendor, and bearing in mind that we are going to run transactions, which will include customers KYC, a lot of the times we don't ask ourselves, where is this information going to be housed? Of course, the majority are cloud-based, right? So, but where in the cloud, which jurisdiction has authority over our customers' information? Right? Is it a jurisdiction that the country itself is in line with, or there's a sanction on that jurisdiction? So you have to take, for instance, a U.S. company that has a cloud-based system in Russia. Right? Search would not be allowed because you can't keep U.S. residents' information in Russia. So that is key. That's compliance officers would need to note if you have to make a recommendation. And two, another thing with privacy, speaking here in the West, is that you're not required to take information that will not be useful for your transaction monitoring and KYC. A lot of the times we want more than enough, and I've seen it in several instances. People want to take all the information they have, but are you going to make use of all the information? Most likely not. So the law says that you should only be taking information that you would use either to identify the customer or to help you with your transaction monitoring purposes. Again, if you're doing that in the times of law, the law says that you have to let the customer know why you are taking the information, except if it is related to suspicious activity or you are filing any reports to the regulator. You should not disclose that. Otherwise, you should let them know why you are taking the information, because it is a requirement from the regulators. And then, letting them know that, look, at the end of the day, it is to protect you. Right? When we started the conversation, Lico did give an example of identity theft, synthetic fraud, right? That he could have the information of Joachim and appear as Joachim, but it is Lico in your skin, right? So it is to protect the customer from fraudulent activities. A lot of the time, if you let customers know that it is for their benefit, they won't they won't hesitate in providing this information to you. So I think the balance there is, first of all, to know the jurisdiction that this information will be kept. Two, to let the customers know why you have to, except if it's relating to reports you have to file. And ultimately, with the institution themselves, I think in developing countries, there's still issues or concerns relating to data protection.
Yeah.
I'm not sure if it's true, but recently I heard about is it breach to NMIC data in customers, Nigerians information with NMIC, the agency responsible for issuing NIN in Nigeria, that they've had, right, several individuals. I want to update my NIN, and I see a guy from WhatsApp saying that they can help me update my personal information. I'm like, really? How do you have access to my personal information? And he would have access to it if you give him the money. He would help you do the necessary changes. And I'm asking myself, this is meant to be a national agency database for citizens, our personal information, and everybody seems to have access to it. So I think there's concern around data protection from the organizational standpoint, from the government standpoint as well.
Yeah. Thank you. Thank you so much. And the last question from Amzat, I think it's a product specific questions to you verified. So I guess the product team will address that. At this point, I would like to thank our speakers for their invaluable contributions and knowledge that they have actually shared on the topic today. I think we have recordings of these sessions, and I really appreciate your time and effort in dissecting the topics we have today. I also appreciate the audience for the quality of questions that have been posed so far. At this point, Akeem, I will hand over to you whether there are any other information from the marketing team.
Thank you so much, sir. Also, there is one last question from Enoch.
Oh, really? Okay, you can take that.
Okay. So he's asking, how are other jurisdictions able to handle beneficial ownership information requirement? In most African countries, there is no beneficial ownership information, and if available, it is not readily available to financial institutions. And this has come up as a strategic finding on mutual evaluation report in the ESAAMLG region.
Yeah.
Okay.
Okay, go ahead, Olaliko.
Beneficial ownership, those information, it depends on the regions where you are reviewing. So some data privacy information is also implied. Okay, for instance, when I was at Citibank, the same organization, I was sitting in Canada, my direct reports were sitting in US, and because I was in a global team, global AML audit, so I need to do AML effectiveness review of Citibank in China. Because of data privacy, I'm not allowed to have access. So I have to do reliance, speak with the auditors in China for them to perform beneficial ownership review and give me the information. So those data privacy concerns can also impact negatively what you want to do, but that's the workaround that I built around it. So, but beneficial ownership cannot be obtained outside maybe your bank, for instance. So if I'm in UBA, you are in other bank, I can't get all this information unless I have to write to you legally. So does that answer the question?
Yeah, I can also chime in here to speak on Canada. So yes, it is a requirement that institutions obtain beneficial ownership. Two, in terms of framework, the federal government did develop and they have implemented early this year a national registry for beneficial ownership. So if you have a business that is federally registered in Canada now, information is publicly available as we have in the UK as well. I know UK too has that public database where you can easily access beneficial owners. Two, it says that part of the regulatory framework also says that if you are not then able to get the beneficial ownership, it boils down to your risk appetite. You can either onboard such customer. If you're going to onboard them, then you should restrict them as high risk and do more frequent reviews, more frequent monitoring what we call the EDD reviews on that. Or if it's out of your risk appetite, you simply decline from onboarding. So it comes down to it. But in terms of what jurisdiction is doing, I can speak for Canada, and I know for UK as well. There is a publicly available database now for beneficial owners that is accessible to everyone.
Awesome. Okay, so Akim, over to you.
Thank you so much, Mr. Joachim. On behalf of the entire management staff and of course every single person on this call, I want to say a very big thank you to you, Mr. Olaleko, and to you, Mr. Claudius, for the incredible insights that you have shared with us today. It is greatly appreciated. I think we officially have a record for the highest number of questions asked on our webinar series so far, and I can tell that there is more. So hopefully, if we get more questions, I'll be sure to pass it along. Just for the sake of information, there's been a lot of questions in the chat about certain services and tools that you may require. So this is to confirm your question, Mr. Amzat, that yes, we can provide the service that you require. We will be in touch with you after the call. I also want to quickly add that eVerify has a product that allow you to confirm beneficial ownership, of businesses in multiple jurisdictions. So you might want to talk to our sales team. I will share the email in the chat, so feel free to give us a chat. We'll also try to be in touch with your registered details. And finally, to everyone who asked about the recording, yes, we will send an email with a copy of the recorded session to everyone that registered. So if you didn't register, you might want to share your details with me via the chat, and we'll also ensure that you get a copy of the recording. Thank you so much, everyone. I think this is where we draw the curtain for today, and I hope to see you on the next one.
Okay.
Thank you, guys.
Thank you for having us.
Thank you.
Bye for now.
Thank you, sirs. Thank you. Have a great rest of the day.
Okay.